Hey guys, my name is Tony, and in today's video we'll be doing another technical analysis on the S&P 500 index. In today's trading session, we've seen that we actually fell well below 3,000, but now we've recovered quite nicely and we're up 1% today. A pretty decent green candlestick, but a very long wick. What happened during the day was that originally the markets fell on Australia's open, and it fell to lows of 293 equivalent on the SPY. This is a pretty major support level in my opinion, but later recovered all the losses, and now we're even up 1% after the Fed announced that it had interest in expanding the debt shopping list. So now they're purchasing even more corporate bonds, short term that is, and that is going to provide a lot of short term relief to companies hit hard by the virus, companies that are struggling to meet short term loan obligations, and that is seen as very good for the economy. Now, I don't think that addresses the coronavirus upticks in any way. I believe the news was that we've saw a decreasing number of new cases in the United States for the past 5 weeks before last week, and after last week, we've seen a new wave of infections. Not that the first wave was ever over in that regard, but we've seen perhaps the start of a second rise in coronavirus cases. However, it seems as though the markets still don't care too much, given that the Fed is willing to do all they can to save the economy. If we take a broader look at things, we are still down quite a bit from where we were over here. I believe the market took like about a 6% down day over here after the initial news broke that we were seeing more cases. But you can see that although we fell again in Sunday evening's trading session, we have now risen quite spectacularly. On a technical basis, I think we've reached a very strong level of support. If we take a look at the fib retracement over here, we can see that the 293 level sort of acted as a little bit of support. We didn't really hit that level, but we were pretty close, and we've bounced right above it. I think the level between the 0.5 and the 0.618 is very strong support over here. I think if we fall below it, we probably can't break below this level given the massive amount of support. So we might just see more consolidation in this area. But the upper bound is also very strong. So I believe what we've seen today was that we've used this area as a bit of support to bounce right back up. At this point, I think there's more evidence that the stock market can go up in the long term, but in the short term, I'd be wary of buying at this level. Again, we are up about 4% since these lows. I believe the futures were down about 3% yesterday night, and now they're up 1%. So that's a 4% gain in essentially just about 12 hours. So, we might be a little bit overbought in the short term. So I'd wait for this to cool off a little bit. But again, I think in this market, it's like you can have more coronavirus cases, but you have a Fed that's unrelenting. So shorting is not necessarily a good idea. Not to say that it can't be a good idea, but I just don't think the risk reward is really there in shorting for the long term. You can say in the short term, like, this is overbought, I think he'll go down tomorrow, maybe I'll cover here. And that's possible, but in the long term, shorting the S&P 500 just doesn't seem very appetizing for me anymore. Like over here, I think that was a really good opportunity, but shorting the market just in general isn't a very good risk reward play, given that the Fed is always against you. So just be careful if you decide to go short on the market in the long term. I think that in the extreme short term, though, we are a bit overbought. If we break above this upper wick, we could go a lot higher. But with the coronavirus cases still on the rise, we haven't seen vaccine that so far solves everything. I think we might see it later on this year, perhaps next year. So if we do see a second wave of coronavirus, that could delay the reopening of the economy, which could be really bad potentially. We may see something like this happen again if much more coronavirus news comes out, but I think it is unlikely that we will see something like this again. But social distancing is kind of being disregarded at the moment, so it's not exactly clear what will happen. I think the economy still is going to be very slow to recover, but the S&P 500 itself, well, it sort of does its own thing. Taking a look at what's actually moving the markets today, we can see that tech stocks again lead us higher. We have Facebook, Apple, Nvidia, Tesla's as always doing pretty well, about to break above 10,000 again. 1,000. It's probably going to break above 10,000 someday. Shopify is sitting around 800. Zoom continues to do very well, which surprises me. It's at 237. I thought it was pretty overvalued at 160 back in the day, but Zoom seems to go up when we have mass panic in the market, and when there's no mass panic in the market, people buy it anyways. Anyways, on the downside, we have some of the weaker part of the economy, cruise lines, United Airlines, and that's about it, the cruise lines and the airlines. But we saw that they were down much more today in the morning before the Fed made its decision to start bailing out companies again. So now they're only down about 2%, but they were down about 10% earlier in the day. And so, yeah, we take a look at oil, we see a similar picture. I think oil is a very good indicator of when the economy is going to reopen, because again, the demand for oil is primarily driven by activity in the economy. When people aren't going to work, people aren't flying places, there's not going to be much demand for oil. But we see that oil similarly rallied for some reason. In my opinion, I think what the Fed did is a economic relief. I'm not sure if it actually solves coronavirus related problems. I'm not sure why oil itself rallied today. It's still interesting to observe. Oil is up about 5%, I believe, from the lows. So yeah, oil's up today as well. If we take a look at gold today, we're down a little bit. I think we're down a lot more today. Again, when stocks get sold off hard, we sort of see gold get sold off really hard as well. It sort of just happens like that when people need cash to cover margins or do whatever else, they sell gold. So I'm not surprised that gold fell a little bit today, but now recovered pretty nicely. Gold right now has a bit of problem breaking above 1800, but we'll see what happens in the long term. In the long term, I still believe gold will hit 2000. But yeah, going back to the S&P 500 index, the conclusion is I think that I wouldn't be too interested in buying in the short term, but I think every time we see something like this happen, when the Fed says we're going in to help save the economy, it just provides more and more evidence that you don't want to short this thing in the long term, and it's probably better to go long. It's just how the markets work, and like it or hate it, the Fed's always going to try to help the markets. So with all that being said, I thank you very much for listening to my analysis of the S&P 500 index, and I wish you best of luck in your trading. Take care.